Gold just confirmed a possible setup for this week along with silver. So I'm going to have both in today's video. We're also going to take a look at the DXY, the US dollar index, because obviously that matters for gold. And the US dollar is doing something that it has not done for 13 months. So my name is Justin Bennett, full-time trader and founder of Daily Price Action. As always, all of this is my opinion only and not financial advice. So let's take a look here at gold. So on the weekly time frame, we have this level here around 43.33. This is the level, if you've seen recent videos, this is the one I mentioned before FOMC. And the reason this is significant here is because this is the yearly open for gold. Okay, so you can see support back here. We never closed below this level. Even on the daily time frame, gold never closed below it back here on this candle. And you can see where this has now become resistance. So the thing that gold just did is it gave us a second weekly close below this. So what I mentioned going into FOMC was that this candle right here, okay, was the first weekly close below the yearly open all year. Now, if this were going to be a false break, then gold should have technically broken back above it last week. Okay, because typically when you get something like a false breakout, as people talk about, you get the close below and then immediately you want to see the market recover. Now, what I was talking about going into FOMC was the short opportunity from this area up here, and we'll take a look at that in a moment. But so far, gold has shown nothing but weakness here with a second weekly close below the yearly open. So in my opinion, guys, there is nothing to be bullish about here on the gold chart. So now let's go in here to a 4-hour time frame. So let's talk about what's happening right now with gold. And this right back here too, by the way, this was the setup going into FOMC. So if we look at a 15-minute time frame, this back here is what we talked about at the time. So you can see where gold was going sideways. We had a BOS here on the 15, a break of structure. That made this down here the protected low. We had the close below it going into FOMC over here. And what you'll notice is we got a retest right here exactly at 43.33. Now, this was not after the fact stuff. I talked about all of this in Discord in real time. This was the setup going into FOMC. I pointed out the change of character. I pointed out 43.33 to VIP members. And then this was the retest. So as always, guys, I post all of this stuff in real time in Discord. I also share all my trades in real time in Discord. And so if you want to see exactly how I trade, then check out the link right here on the screen. That is going to be a free SMC training that shows you how I trade SMC full time. And then if you want to join us in Discord, this is important. If you want to join us in Discord, sign in or join that free course. And then as soon as you join that free course, you're going to see an offer to join us in Discord as well. You don't have to. If you want to, that's great. It is lifetime access. There's no monthly fees or anything else. And I am in there every single day. Okay, so looking at gold now, what we have, this was the setup before going into FOMC, obviously worked out really, really well here. And what we have from gold now is so far a recovery with higher highs and higher lows since this low back here. Okay, so in my opinion, looking at gold right now, obviously you don't want to chase this lower because if you look at this on the hourly, right, we have the market coming back here toward this imbalance back here in this area. And again, we are forming some higher highs and higher lows. So it's important not to chase this. And instead, what I look at are the inefficiencies that were formed last week. So in that case, what we have here for gold is we have obviously this candle right here, this hourly candle. However, we also have this one back here. Now, if we go to a 4-hour time frame, it's even more obvious. Okay, and this is why I like to jump around time frames just to kind of get a feel for what's happening here. And what you'll notice is that this area right back here, I don't know if we're going to get this high this week, but if we were, this is the area where I would love to look for shorts. Okay, so I will say that, this up here, so with FOMC, here's the thing. This back here was the short, in my opinion, following FOMC. It was very, very clear. Break of structure, change of character. We had that yearly open right here that we had closed below on the weekly. This was, in my opinion, the short for gold. So anything after this is really kind of secondary, right? It's a second chance opportunity because this one was the best one, in my opinion. And again, I don't know if we're going to get up here, but what we have right now from gold are higher highs and higher lows. So here's how this is going to work, at least in my opinion, for the way I trade. We either get gold coming up here, and then on a 15-minute time frame, if we do get that, what you'll notice here so far is when you're trading with SMC, it's all very simple, right? You've got these highs back here. We have a BOS. Now you have this high right over here, and you're looking for another BOS. Okay, so at the moment, what you can see is that since this high back here, gold has just been going sideways. So this is not the protected low. The protected low right now is all the way down here. So ideally we get gold giving us, further structure here this week. Okay. Further relief, above this high up here, closing above here, making this down here the protected low, and then possibly up here into this imbalance following FOMC. Okay, so if we get this somewhere around like 4280, 4300, that would be, in my opinion, a great area to look for shorts. You can also see here too that off of these lows down here and these highs, we do have some symmetry forming in the form of an ascending channel. Okay, so this, in my opinion, is where I would love to look for shorts on gold. I don't know if we're going to get that high, but if we do, that would be, in my opinion, pretty ideal. Now, you can also see too, where if we go to something like, let's see, a 1 hour time frame and come back here, you can also see that following this move, so this was FOMC, and you can see that above this high, we also have a bit of an imbalance up here. So there is, a possibility, a rare case, in my opinion, 43.40 up here, we could see that. But what's going to confirm this, as always, okay, how do we know if we're going to get this up here or this up here? It all comes down to structure. So on a 15-minute time frame, what I'm looking for is, again, the market to push up here and give me some kind of structure to play, right? So we come up here, close above high, and then we get the close below the low, giving us a change of character. Okay, so that's what I look for every single time. Now, again, I don't know if we're going to get this, but if we don't, in the absence of this right here, and we just start to break down and break below some of these lows, then in my opinion, we are probably not going to see this up here, and we could just see gold rotate lower from current levels. But as I always say, guys, it's important to not chase, especially this early in the week. It's only Monday. We saw a pretty big move here from gold last week. So I would like to see some relief up here to some of these inefficiencies that were formed following last week's FOMC. Okay, so let's move on to silver, and then we will finish up with the US dollar. And by the way, if these videos are helping, if you're enjoying this content, be sure to smash the like button and leave your comment. It really does mean a lot. All right, so 5-day time frame for silver. This is what we talked about as well going into FOMC. And this was the first 5-day close. Again, for silver, this is the yearly open right around 71.33. Okay, so this was the yearly open. So back here, and what you'll notice is that it served as support all this entire time. This was the first 5-day close below here going into FOMC. You can see silver tested it exactly here on this high. And it was a pretty significant pullback from this high down here to this low. So a decent short for anybody who caught that. And again, if you go back and watch the videos, guys, we talked about this in real time as silver was up here right around $70. Okay, now as far as where we go from here, it's very similar to gold in the sense that we do have some imbalances here on the silver chart, specifically this one right up here. Okay, so you can see this 2 candle pattern, specifically this one right here. I would love to see silver tap into this area. Okay, so again, you can see this right here. We had this candle here, and specifically from this low right here down here to about this high. Okay, I would love to see silver come up here into this region before looking for fresh shorts this week. So we'll see if we get that. I mean, so far we have seen a little bit of relief here from silver, but all in all, kind of like gold, it's looking very lethargic. And this is why too, you can see this move right here, guys, this is impulsive, this is corrective. And you can just tell that by the velocity of these moves. I mean, this was very, very aggressive. This so far, again, is pretty lethargic in terms of a bounce. Okay, so I am still bearish here, but like gold, like I mentioned there, I am still looking for some relief. It's early in the week. I want to see some of these inefficiencies from last week to be mitigated before I look for any shorts. So going into the 15-minute time frame, again, like gold too, what's going to be key here is waiting for the market to give you a structure to trade, because right now, what you can see here is that we have these higher highs and higher lows. Okay, so if we see silver come up here and take out this high up here, okay, so close above on something like a 15, then this becomes the protected low, in which case any close below here would be bearish. Okay, so really we're just walking this up right now, or at least that's what I'm doing, waiting for the market to give me some kind of structure. But again, pockets like this up here, right? Moves like this up here, areas like this, I would love to see mitigated before looking for some type of shift in momentum to get short. Okay, so in terms of support on the way down, you can see I've got these levels marked up here. So on the daily time frame, you can see we've obviously got the lows back here that would come into play. Okay, so lows down here in this area. And then you can see too, we have these 2 highs right back here around 54.30. So we've got the highs back here, also displacement back here too. This was an inefficiency in the market. And then of course we've got 48. We've talked about this before, but going to a 12-month time frame, meaning that every candle is 1 year, you can see that this is a 46-year level down here. Now, obviously it could take some time to get there, but my point is if silver were to get there down toward 48, then that is certainly a level to watch. Okay, and let's do the same thing on gold too, because I realized we did not really go over support levels on the way down. We've talked about this before though. So really we've got these lows back here, right? So this is going to be a factor on the way down. And then we've also got this little pivot around 38.95. I think this is one to watch. We've got the highs back here, this low, and then of course this area down here around 34 to 3,500. Okay. Now let's talk about the US dollar here to wrap up, because obviously this matters when you're trading gold. And I talked about this one in the SMC outlook, and a lot of comments, guys, talking about being bearish on the US dollar. And look, what I said in the outlook video was that sure, you can be bearish on a market, but you also have to pay attention to what's on the chart. And I'm not saying that I'm right. I'm not saying that I'm always right. Certainly not. But when you look at this here, this was the highest weekly close for the DXY since all the way back here. So 13 months ago. And the market cleared all these highs back here. Now, it doesn't mean we can't get a pullback, okay? Because what you'll notice is that if we go to a daily time frame, we do have some inefficiencies that have built up down here, okay? So it doesn't mean that we can't get the US dollar pulling back. In fact, this is kind of what I'm looking for. I would love to see the dollar pull back toward this candle and possibly even this one down here before looking for fresh US dollar longs. But ultimately, being bearish on this market and trading against this, in my opinion, is ill-advised, okay? And furthermore too, if you've been watching these videos for the last few months, this bullish change of character back here, this is why I was looking for a higher low to develop down here, which is exactly what we got. Okay, and within the context of this channel, you can see where any pullbacks here, in my opinion, I am looking for buys, whether it be here or here. It depends on the lower time frame structure in terms of where I look to buy the US dollar. But ultimately, I do think that the path toward areas like this up here, okay, so you've got areas like this high back here, possibly up toward 106 later this year, like I talked about in a previous video. But really, you've got areas like this up here that could become a factor over the coming weeks, as long as the market can hold on to this current structure that we have developing. Okay, so I am still bullish on the US dollar, although we could see a pullback here this week to come down and mitigate some of these inefficiencies down here and give us that efficient auction that markets often desire. And if we get that, then of course that could push gold up. But again, this is not a reason to be bullish on gold, in my opinion. Okay, I'm still bearish on this market, but I would love to see some relief up here toward the 4,300 area. Don't know if we're going to get there, but if we do, I will be looking for shorts. So I truly hope this video helped. Be sure to check out the free SMC training right here on the screen. That's going to show you exactly how I trade SMC full time. If you don't see it here, check out the description of this video. Until next time, trade well. I will talk to you again tomorrow.